While the US government was celebrating a strong dollar, China quietly made a $150 billion move that could change everything. They're dumping US Treasury bonds at record speed and buying gold like there's no tomorrow. And the 3 reasons why should terrify every American investor.
And that right there, that's the core of what we're digging into today. This isn't just some abstract portfolio adjustment. This is economic strategy, maybe even warfare, playing out on a global scale.
All right, before we get into the why behind all this, we've got to start with the hard numbers, because trust me, the data alone tells a pretty shocking story. So get this, in just the last 18 months, China's central bank has officially piled on another 22.7 metric tons of gold. Now this is part of a much bigger play, a gold gamble worth over $150 billion. I mean, this isn't some minor portfolio tweak. We're talking about a sustained, almost unprecedented buying spree. And while they're buying all that gold, what are they selling? US debt. They're aggressively dumping it. Right now, their holdings of US Treasury bonds have just plummeted to a 14-year low, sitting at only $745 billion.
And to really get your head around the scale of this sell-off, you have to look at where they used to be. That $745 billion, well, that's down from their peak of over $1.3 trillion back in 2013. That's a massive, and I mean massive, deliberate reduction of more than $500 billion. Gone.
And look at this. This chart right here lays it all out perfectly. As their gold reserves are climbing, what's happening to their US Treasury holdings? They're falling off a cliff. This is not a coincidence, folks. This is a calculated pivot, a great rotation away from dollar-based assets and into hard physical gold.
So, that brings us to the big question. Why? Why are they doing this? Well, the first major reason is all about a strategic escape from the US dollar's grip on the world. And this leads to a term you're probably going to be hearing a lot more about, de-dollarization. All it really means is this conscious, strategic effort by countries to build a financial world that doesn't completely revolve around the United States and its currency.
And if you want to know the event that really lit a fire under this strategy, look no further than this. Remember when the US froze Russia's $300 billion in assets after the invasion of Ukraine? You can bet China watched that happen and thought, whoa, we need assets that America can't touch. For a country holding over $1 trillion in dollar-based assets, that was a massive, undeniable warning shot.
And this really gets to the heart of it, the crucial difference in any kind of financial conflict. Your dollar assets, they're mostly digital, held in accounts all over the world. They can be frozen with the stroke of a key. But physical gold bullion, the stuff you hold in your own country's vaults, that's sovereign. No one can sanction it, no one can seize it, it's yours.
And don't think for a second this is just about buying gold. Oh no. They are actively building the entire infrastructure for this post-dollar world. They're creating their own payment systems like BRICS Pay as an alternative to the Western-controlled SWIFT system. They're pushing hard to get countries to trade oil in their own currency, the yuan. They're building the whole shebang.
Okay, so that's reason number 1. Now for the second reason. And this isn't just about escaping America's geopolitical power. It's about escaping a huge problem China sees brewing right inside the US economy itself. It's staggering and, frankly, terrifying national debt.
Right now, the US national debt has absolutely ballooned to over $37 trillion. And if you're a country like China, one of America's biggest foreign creditors, that number isn't just a statistic on a screen. It is a colossal, flashing red flag.
And if you need another reason to be concerned, look at this. This chart shows a really startling and historic milestone. For the very first time, the annual interest payments on the US debt are now set to be more than the entire US defense budget. Just let that sink in for a second. America will soon spend more just paying the interest on its past debt than it does to fund its entire military.
So you see, China isn't doing this to be malicious. They're not betting against America out of spite. They're simply protecting themselves from what they see as inevitable, a US debt crisis that could completely destroy the value of all those bonds they're holding. And from their perspective, what's the only reliable insurance policy against that? Gold.
And that brings us to the third and honestly the most sobering reason of all. Because this financial strategy, well, it has a very clear geopolitical and military dimension to it.
This is where it gets really serious. This is the part of the story where all those numbers on a screen, they stop being abstract. They translate into real-world strategic positioning for a potential future conflict.
When you map China's actions on a timeline like this, a pretty clear pattern starts to emerge. The big lesson from the war in Ukraine in 2022 was the devastating power of Western sanctions. And every major move since then, from expanding the BRICS alliance to this record-breaking gold buying spree, it all points to one thing. They are hardening their economy for a potential flashpoint. And a lot of military analysts are pointing their fingers at Taiwan sometime around 2027.
It's like China is wargaming the exact playbook they expect the West to use against them. They fully anticipate that in a conflict scenario, the US would immediately move to freeze their dollar assets and cut them off from the SWIFT system. So by stockpiling sanction-proof gold, they're trying to make themselves strong enough to survive that kind of economic attack.
Okay, so that is the global chess match. But let's bring it home. How does all this affect you? What does all of this high-stakes maneuvering actually mean for your wallet?
And it's a really important question to ask, because when the world's second-largest economy makes a move this big, you better believe that ripple effects eventually reach all of us.
All right, so let's talk about that ripple effect. First, when a huge buyer like China stops buying US debt, that can lead to a weaker dollar, which means higher inflation for you and me. It can also mean higher interest rates on everything. We're talking mortgages, car loans, you name it. For investors, well, it signals new risks in the bond market, but it also creates a really strong price floor for gold.
Now, let's be clear. The US dollar is not collapsing tomorrow. The United States still has the world's largest economy and the most powerful military. But what China is doing, it's a massive warning shot across the bow. It's a sign that the era of the dollar's unchallenged dominance is, well, it's coming to an end.
The question isn't whether this matters. It's what you're going to do about it. Subscribe, because I'm tracking every move in this economic chess game, and hit that notification bell so you don't miss the next one.